Let me introduce and welcome Teresa Barger now. Teresa, welcome to India and welcome to our studio.
Thank you very much. I'm delighted to be here.
How has been for your India stay so far?
Very good.
Yeah, I spotted that the first thing.
I went to a wedding.
Yes.
Oh, wow. Yeah. No, it's been terrific.
Yeah. So what should we start with? Your view on US economy or your view on Indian markets?
As you like, I don't specialize in the US.
But you know, I remember reading a quote from you, and that was about the Republican administration, where he talked about globalization, and I think one of the foreign magazines has quoted you saying that for Donald Trump to talk about anti-globalization is like saying that, you know, you're denying winter and not buying a winter coat.
Oh, that's so interesting. So if I may set the record straight, that's what Nelson Mandela said when I met him in 1990. Oh. And so it really, I can take no credit for it. Nelson Mandela said, being against globalization is like being against winter and not buying a winter coat. Okay. And so I really have to give the credit to the great Nelson Mandela.
What amazes me about the current global setup is that even though there was a lot expected from the Trump administration in terms of tax cuts, policy reforms, US markets have rallied. Nothing has come so far, but there is no panic whatsoever, either in emerging markets or in developed markets. Why is that? Why are markets so immune to this kind of a setup?
Well, I think what happened in November 8, and a day that will live in infamy from our point of view, because Prime Minister Modi chose the day of the U.S. election to demonetize. And
tell us about it. Yeah, we were all ready to cover Trump.
No thanks. And then there was this immediate reaction in the Trump trade that brought all the money back to the U.S. because we were immediately going to have all these lovely things: tax reform, no red tape, infrastructure spend, big fiscal stimulus. So once I think that got ironed out, and after a couple of months, we saw the Trump trade regularize, and the money went back to where it came from. Then money poured into the emerging markets in 2017, and I think you got a normalization there. So I think that people have lowered their expectations. No one is expecting that Trump is going to have great legislative victories, because he has had none so far. He's been able to do some things by executive power, and now the U.S. has continued to fund the government. And the next thing is the debt ceiling, and if those go okay, I don't think there would be panic. But people have renormalized. You know, you went from the North Koreans being the source of nuclear holocaust to, oh, it's not so bad, they haven't had a second test. So I think there's a human spirit that really wants to renormalize a lot of these things.
You talked about November 8th, Teresa, and you know, that brings me to my next question. We are still reeling under the impact of what Prime Minister Modi did in November 8th. There are still earnings which are yet to catch up. There's then after November 8th, there was the GST implementation as well. And there's a big question mark looming about earnings and when the revival would really come in. Having said that, there's such a gush of inflows and such a gush of money pouring in month after month, and we can see that in the mutual fund data in the form of SIPs, that's sort of taking care of the Indian equities for now. And you've got good support from global equities as well. So there's no reason for that bubble burst to really come in. But does that worry you at all? Because you are invested in some of the key Indian companies, which I'll come to in just a bit, but the earnings not playing a catch up. Is that a worry point at all?
We don't invest in the Sensex, and we don't actually advise people to invest in the index. Why would you invest in the index? It doesn't reflect the Indian economy. So if you look company by company, some of our companies have EPS growth of 20, 30, 40%, right? So the entire index does not have very good EPS growth, but we're not investing in the entire index, right? So we're going to invest in very specific companies where we see there is earnings momentum. Absolutely true that we see a hiccup coming with the GST. We don't expect things to be spectacular, but we're long-term investors. And so for the long term, I think we're fine.
And have you seen more money get allocated to India and within emerging market funds over the course of the last 6 months as this US expectation kind of peters out? Have you seen more money come back?
When we talk to investors, they are most keen on India. When you look at the numbers, we have seen foreign flows coming out of India, but being made up by the local flows.
Yeah,
so it's hard, you have to dissect that as to which ETF flows. But when we talk to investors one-on-one, that's the country they all want to talk about.
Okay, so I'll tell you what, we've done a rather crude dissection of your portfolio. We know the asset under management.
Everyone knows everything in India. There are no secrets in India.
No, not the stocks, but first the broader allocation, and then I promise you we'll talk about stocks as well.
Okay.
So you may want to pay attention to the television screen, because these are special augmented reality graphics which will just come up on your screen. And this is a very crude representation of what your current allocation is, and correct me if my numbers are slightly old or updated.
Okay.
About 37% of your total allocation right now is in India. As a country, you currently have the highest exposure to India.
Yes, we do.
You are owning a market which could be called as a very expensive market. You could be owning a market at a time when earnings are not there and the valuation comfort could be missing. So for a long-term investor, the promise is great, but the entry price also matters. How would you defend that?
Well, the entry price matters, and we did start to come into India before Modi was elected, because our view was whoever was elected in India had to reform, that India's back was to the wall and they had to reform. And so we came in actually at some quite good prices. But if you say that every day you hold is a day you buy, you have to look at valuations every day. And of course, India is one of those markets where you could buy a company that was expensive and it got more expensive. And that's really been the story of India. And Mr. Baruka, whom I hope we will have, talking about Kansai Nerolac, saying, well, you didn't come into Kansai Nerolac because it was expensive, so you went to the Kansai parent, which was shockingly cheap. But you actually could have done just as well, or even better, being in an expensive stock like Kansai Nerolac and having it more expensive. But our IRR on Kansai Parent has been 30%. So we've done actually well going into the parent, but the driver of the parent is Kansai Nerolac. So it's this question of what's expensive in India is a vexing question to everyone. So we will look at all of the metrics, including the spread between the ROIC and the weighted average cost of capital. So you take a company like Page, very expensive, but that spread between ROIC and WACC is spectacular.
Okay. So we've looked at your portfolio now, and just pay attention here.
Dear,
you can
I'm
point
sure
out
you know
if I'm missing on something. We've tried to, balance it out with whatever information is there in the public domain. So there you go.
Yeah, there.
And there you go. There you go. Now, Shree Cement, Marico, TVS Motors, Page Industries, PI Industries, RBL, and Chola Finance. And I must confess that I've been a secret admirer of yours, because you bought into iShares, you bought into some of the companies I personally admire a lot. But your latest entry has been RBL and Chola Finance. These are recent purchases. When I say recent purchases, less than 12
Sort
months.
of. We were in RBL pre-IPO.
About a year.
No, we've been in there for 5-6 years.
5-6. Oh, you really bought it?
Yes,
okay.
We did.
Chola has been a recent entry.
Yes.
Okay.
Yeah.
Why do you like Chola Man? Do you like the truck business? Do you like their NBFC business? Why do you like the business so much?
Well, we really like the theme of financialization in India, and I think that's here to stay. So we are only in small and mid caps, so we can't buy HDFC Bank or Kotak Bank or something.
iShares is not a mid cap.
We bought it at $4 billion market cap.
She bought it when it was a knowing that it will turn a mega
The fact
cap.
that it's now 10 billion is a different subject. So what we first of all, we only go into high quality companies with high integrity sponsors, and so we're very admiring of the Motogoppa Group, and that's very important for us when we're looking at who to invest in. So that's one part of our negative screen, if you will. And then positively, what we like about Chola is its niche in the market, its ability to use data. where it's going on new products, online products, that they are growing with smaller footprint because they can use the more technology. We like the access to the SMEs. We like what we think is superior credit processes. And we think that there's room for both banks and NBFCs. And NBFCs have a very special relationship with the smaller sized companies. So with having one bank and one NBFC, we can, I think, get both parts of the market.
I have to ask you about Eicher Motors. So they were in the news recently because they're bidding for Ducati now. They've got this global ambition.
Yeah.
Would you be comfortable with that decision of theirs? Because they've got it great going in their domestic business. Just about every man I know is a Royal Enfield's admirer, and you can see that month on month in their numbers.
And you're not a Royal Enfield,
no,
just
I'm
the
not.
men?
I'm not into
I'm
bikes.
shocked.
I'm more a JLR fan.
So that you can offer Eicher.
So you're the cool one. You're hip.
That's how people define us.
JLR is my ride. But anyway. Yeah. So, I mean, does that decision of theirs or even the thought make you a little uneasy? Because they'd definitely be stretching their balance sheet.
They would, but our calculations is that it's not going to matter very much.
Okay.
It's just not going to be a big game changer either way, negative or positive. What would be a little upsetting to them is if another Indian company buys Ducati. So I think there's a little bit of a defensive there. The other thing is that they love the engineering, and they had their head designer was an ex-Ducati. And so for design, Ducati's hard to beat. They've gone to the UK for engineering, and they have their engineering operation in the UK. And so that they're a company willing to go to wherever the globally best skills are, I think is actually to their benefit.
Right. So if some
and
other
this
Indian
one trick
company were to buy Ducati and beat them in the race, would you rethink your investment in Eicher or not quite? You got it so cheap that it doesn't matter.
Not really. I think the real issue is on the CV front. I'm so admiring of Siddhartha Lal when he took over the company at age 30, and he said, we have 13 lines of business. I would like to sell 11 of them. And I asked him, what did your father think? He said, well, my father had no say in it because my father gave me the business. I said, but what did he think? He said, well, he thought if that's what you want to do, do that.
Wow.
And so we're thinking maybe they should have one line of business, not two. But that's
It's just
ongoing.
Beautifully for them.
Yeah.
Do you think, Teresa, that Ducati could do for Eicher what JLR has done for Tata Motors?
I don't think it's a game changer in that way.
Okay.
It's a niche product. It's very much a niche product, the Ducati, just worldwide. But it could be useful for them in terms of the skills base of design and engineering.
Okay.
But why have you booked out of Eicher? It's not completely, but the data what we have, and this is exchange reported data, have you reduced your ownership in Eicher?
We've taken some profits in Eicher, yeah.
That's just a
Which is
tactical
part
move.
of course.
Yeah. Sorry?
Which is part of course. I mean, you would want to
Yeah.
realize profits at high
Yes,
levels.
yeah. Part of that. And also, you know, we're have a ceiling as the maximum we can have in India.
Okay, and what is that ceiling?
40% we can have in any one country. We're very concentrated, right? We take bets. We're very off index, but still, it is in our documents that we can't have any more than 40%
But the stocks
in one
which
country.
you own, and again, you know, this isn't public domain. Let's not talk about performance, because stock performance is a function of many factors, technical factors, flows, geopolitical factors. What investors can predict is earnings. What they can predict is the robustness of the business. So the 7-8 names which you own, you think you can predict, or you're confident of an earnings growth of 25 to 30% for next 4 or 5 years. You see that kind of an CAGR growth in the businesses or the investments you have in India?
We do.
Yeah. Which one do you think could be the outlier out of the portfolio?
You're going to ask me which child I love best? I don't think I can answer that question.
Right.
But the fact you bought into RBL 5 years ago, RBL was a different bank. I mean, they were struggling. They were only in Maharashtra. The management was trying to boost the return on asset.
No, we bought when the new management team came in.
That's the time you bought it.
Yeah.
Can RBL be part of your portfolio for next 4 to 5 years? Do you think you can see
Yeah,
that
it could
kind
be.
of invisibility?
I think the financialization theme in India could play out for the next 3, 4, 5 years.
So is there anything? Sorry.
I just want on RBL only. You know, recently, just about a few days back, we had Bharat Financial talking about an exclusivity agreement with IndusInd Bank, and RBL was in the fray for that. Would you believe that that's the way forward for RBL? That they look at some sort of consolidation to kind of build their footprint? Is that?
That's something that they've been open to all along. Ever since we've been with them for actually now for quite a long time.
Yeah.
That they have been very open to those kinds of tie-ups. So I wouldn't be surprised if we see something. I don't know anything.
Yeah.
I only have public information, so that's all I know.
But logically, that would make sense.
But logically, it's something they've proven themselves to be very open to.
So if I look at your portfolio, it's largely niche consumption and financials. Largely, that's how I would classify. When is it that you would maybe decrease financials, up consumption, or decrease consumption, up financials? Because the financial sector is really opening up. Insurance, we just have one listed player, and there are just so many now coming and planning to hit the market as I speak right now.
Yes,
is
indeed.
that a pocket which interests you?
We could look into it more deeply. Right now, we have our 7 children, and we have to, in order to go into a new company, we have to get out of an old company.
That's why I asked.
Right?
When is it
so
that you would
this is
change
really
the balance?
Solomonic here for us. What we very much like the financialization theme. We like the formalization theme, which we realize will take some time, but we think that that's a very important theme for companies like Page and Marico, for example. And in terms of consumption, of course, India is always a consumption story. And where you go back and forth between discretionary or staples, that kind of thing, really that's a slow and steady, maybe actually fast and steady kind of theme.
If I notice the consumption plays you have, you pretty much like monoline businesses. Page is just one category. Marico hair care, that's one category. iShare, one category. They are not a complex auto company. Page is a monoline business. They are only catering to the innerwear market. Marico also simple. Marico also monoline business. It's not HUL, which is into hair care, which is into female hygiene, which is also into all kind of other businesses. Is that a conscious?
It's a very insightful and interesting question. The market has shown they pay more for a pure play than for companies that do this and that. We have looked at some companies in India that are very much what I call this and that companies. And where's the focus? Where are the skills base? What is it they do well? And we have gone into those companies and worked with them to sell off non-core businesses. That's a very profitable approach. But in India, I would say a little more difficult than, for example, in Latin America. We've had great success in having companies sell off non-core businesses. So it's a theme we've been able to play in Latin America. But the market will ultimately pay more for pure plays. So we like the pure plays.
Teresa,
and we love the paint industry as well.
Yeah, you did. And we have Mr. Maruka right here. He's getting mic'd up. So in a moment we will be touching base with him.
He's so far away from me. I thought I was going to be asking you questions.
We should have placed him on the other side. No, but I'm very inquisitive to ask you, because despite valuations, you have bought stocks at an expensive price and then see them go more expensive.
Yes.
But as a fund manager, when do you decide to sell a stock? Because world over, there's all this talk about valuations seeming stretched and there being this herd mentality, more money pouring into the premium stocks, so to speak, Apple being a case in point. Yeah. So when is a prudent time to take some money off the table, like you have done in Eicher Motors? I know you have your allocation limits and stuff like that. But is there a comparative analysis that you draw looking at the earnings yield at a high price to bond yields and across the sector, the yields in the market otherwise?
We're not really looking at the yields versus bonds, but we are looking at our opportunities in the existing portfolio versus new ideas, which are constantly being generated. So every portfolio company has to prove itself versus other new ideas and other companies in the portfolio in terms of what the weighting is. And so, for us, every day a company is proving itself to us. And that's really where we get into the buy decisions. But as long-term investors, we also will go back to what our long-term models are showing us about whether we think that investment thesis that we had in the beginning, our engagement thesis, is still playing out and has more to play. And if it does have more to play, then that's what we're really looking at, 2 long-term bets as opposed to anything tactical.
Okay.
Before we
Let's
throw it
welcome
open
on
to
board.
Mr. Baruch,
No,
I
go
just
ahead.
have one follow-up question, which is one mid-cap stock which you thought you wanted to buy and you just missed it out. You like the business, but you don't own it.
Sorry, we didn't want it, or we
You
missed
wanted
it?
to buy it, you missed it. I mean, you say,
Oh my
okay,
gosh,
I should have
there's
bought
so
that stock.
many of them. But in India, I'm not thinking, and it's not coming to the mind, top of mind immediately. But we got into a stock in Thailand literally 2 weeks late. We were doing our work because it takes us a long time to do our work, and literally had we gone into, it was very liquid. Whether it gone in 2 weeks earlier, it made a big difference
How
to
many
the
stocks
price.
are you studying in India right now?
Well, India, we have a problem. So we're studying only 2 or 3 stocks in India right now.
Wow. Okay, so let's discuss one of those. We have Mr. Bhanuka with us from Kansai Nerolac. But before that, I want to ask you, what's your holding in Kansai, and when is it that you got into the stock?
So we got into the stock in February 2016.
Okay.
But what we did is we were looking at the theme of the paint theme throughout the emerging markets. Well, we knew, of course, Kansai Nerolac and Barger and Asia Paints, and Kansai Nerolac was a very expensive, stock. And so we said, well, let's look at the parent. And the parent was trading at 6 times EV to EBITDA.
Was this around the time when we had that big sell-off in February 2016? Because the start of the year was very painful for world markets, if you remember.
It was actually globally. But it was before we started to see some consolidation globally in the paint industry, and the paint industry started getting a lot of attention. So it was good that it was before that period. And then, but 6 times EV to EBITDA versus Nippon Paint at 9 times EV to EBITDA, it just looked very cheap. But in fact, we had to go to our friends in India to get the introduction to the Japanese company.
Okay, now, as members of press, we have liberty of asking management's hard questions. So tell me what your expectations are, and then I'll ask your question on behalf to the management.
It's a 79% return from the day that Kartika Capital got into the stock.
So what your growth expectations are from the company? What do you think they could do in terms of size, in terms of reach, in terms of gaining market share? Where do you think it's
Sorry, for Kansai Nerolac, not Kansai. We're not in Kansai Nerolac, just to tell you. We're in Kansai Paint. But the biggest driver for Kansai Paint is Kansai Nerolac. Okay. Yeah. Yes, so I could ask Mr. Baruch whether he thinks the market share gains they've seen in this calendar year are going to continue.
Mr. Baruch, welcome to the show firstly.
Thank you.
And that's one of your large investors asking you whether or not your market share will continue to gain the way it has.
I think the market cap is growing, so it indicates market share is also growing. So, and I'm sure the analyst of Teresa will tell them how much market share has been gained.
What is the current market share? What was the market share? Why don't you just give us the entire backdrop here?
I mean, let's put it this way. In last 2 years, we play into sectors, industrial as well as decorative. And when it comes to industrial, it's a specialty player. So growth of our customer need not be my growth, because we keep on reducing on the value engineering, keep doing value engineering. So a lot of reduction in the consumption at the customer end. So you cannot measure my growth vis-a-vis other paint industry growth, because they are more into the architecture or decorative player, and we have a 50% of segment revenue coming from decorative. So if you look at only decorative, I think last 2 years we have been doing far better than what industry has been doing, and we have been having a double-digit growth quarter on quarter.
But this is really a market share sector, so to speak, Mr. Bharuka. So, over the next 2 years, what is the target that you're moving towards?
Let us put it this way: this is the industry which has been growing at double-digit for last 30 years, and I always say next 25 years it is going to have a double-digit growth, right? So it is best FMCG sector, and when everything is going well, there are limited players in the industry. I don't think we need to now disturb the market and say, look, we need to do far better than what industry is doing. I think industry is doing very well, And I mean, let us hold on to that strategy in the public domain, what we are doing, what we would be doing. But for timing, it is enough to say we have been doing better than the industry.
Teresa, are you convinced, or would you have more questions?
Well, I think one of the most exciting things is that Mr. Baruka is the first Indian national to be on the board of a Japanese company. Yeah. He was elevated to be a board member of Kansai Parent in Japan. Very interesting corporate governance contrasts. A lot of people say to me, how can you invest in India? The corporate governance is so bad. And I look at them like, no, you're confusing the fact that there are some of the 5,000 companies, some are low integrity promoters with actually good governance, because there are many companies in India that have very good governance and they know how to do good governance. Whereas Japan is a market that has unique governance unto itself, and it's not necessarily international standards. So here I think we have an example of someone who comes from a very well-governed subsidiary company going into a Japanese environment where I think he can add huge value. I'm just totally delighted by that. So I'd like to ask him how he sees Japan. I don't know if your viewers are interested in globally in Japan.
No, I think you're right. I mean, everyone knows Japanese, the way Japanese govern their corporates are more close-knit, corporation, and they still don't follow what normally Western or the Indian standards of corporate governance. So it's always a challenge. But the fact, as you rightly pointed out, the Japanese corporates are different, but Kansai is different. I mean, as you rightly said, first company to have a outside representation. So I think that indicates the positive thinking of Kansai, and 62% of Kansai revenue comes from outside Japan. In fact, I always say future of Japan is outside Japan. Yeah. Right?
And in the emerging markets. This is an emerging market stock, Kansai Pay.
Which is why Prime Minister Shinzo Abe is in India right now. Yeah. Which is why Prime Minister Shinzo Abe is in India. Timely that we talk about Japan and India and bilateral ties.
That's right. I mean, India and Japan, if I just think about it, there are two classic examples here. Maruti, that's the first one, Honda. I mean, if you look at for Suzuki, the Suzuki India business is greater than the global business. And for Honda, when they came to India with Hero, it was a very formidable and a very powerful franchise.
Yes.
Excepting the Daiichi episode, which is unfortunate, rather, what happened. I guess the Japanese companies have had a good relationship going with Indian companies. What are the sound bites which you're getting from your parent here? Because, time and again we get indications from Suzuki, time and again we get indications, from Honda as to how serious are they about investing in India. Yeah. What is your parent commitment towards the India business?
I think tremendous. I mean, unfortunately, there are not many opportunities which are available as far as paint segment is concerned. So we are, of course, organically we are growing, but we are always open for inorganic opportunities. And as you can see, we have a market cap of $4 billion, whereas Kansai market cap is close to $7 billion. So virtually, 60% of the market cap comes from KNP. And so they are very bullish on India, and the fact is that I am on their board indicates their bullishness about the Indian company.
That indeed is the case. I also wanted to ask you about how the GST rollout and demonetization made you feel a little more circumspect about the transition within corporate India and the companies that you held, that they would go through a painful period for a bit and then come out of it. And Mr. Baruka, that's a question for you as well. So I want your opinion on that first, and then you take it with Mr. Baruka.
After the initial horror faded, it was only a few days really, we're actually quite positive on the long-term effects of demonetization, particularly on the financialization of India. And that equation, the investment equals savings, called the investment identity, only holds if your savings is in financial form. If it's under the mattress, investment does not equal savings. And what India needs is investment. And so getting that money out of mattresses into banks, and then from banks into mutual funds, pension funds, insurance companies, that's extremely important for eventually getting the investment cycle to turn. And so forget the black money concept on the demon that didn't work so well. The financialization aspect, I think, is huge. So we were very positive about that. GST, obviously the upside is that you have one market, which is great. I don't know whether for Mr. Baruka that means he doesn't need to have so many different distribution points or so many different factories. That's a question for him. But it should make Indian business more efficient over the long run. I don't know what you think.
Are the teething troubles over, Mr. Baruka, or?
I mean,
and do you believe that the last 2 months pain that you may have seen in demand that would revive through the course of the festive season and beyond?
I think, as I said, paint industry demand never got affected. Even in 2008, when there was a slowdown, I mean, paint industry was not affected. And even if you saw first quarter result, we had a double-digit growth. And I think end of the first quarter result, I said we are going to have a double-digit growth even before GST was implemented. And I think we are on that course. So GST definitely is going to have a positive effect. In fact, it's not GST. I have, there are 3 drivers which are going to drive, the informal economy to formal economy. One, of course, is GST, which is definitely helping. Another, environmental concern, right? And third is the government, which is trying to increase the minimum wages. Right, so these 3 are going to put a lot of pressure on the informal economy, and definitely there is going to be a shift from informal economy to formal economy, not only for paint but for most of the other sector which is going to see. And I think GST is definitely having a positive effect. I mean, you can't expect within 1 month or 2 months change will take place, but we are seeing a change, and according to me this change will continue going forward.
Would that open opportunities for acquisition? If the informal economy is the place to be or expand in?
Unfortunately, this informal economy does not have a brand, right? So the automatically shift is going to take place. Why you need to acquire? So acquisition cost is far higher. So the organic growth itself is going to drive it.
Okay, now even though you are a B2C business, the challenge for the paint industry is that there is a very strong dependence on crude. I mean, crude and crude components, they are an important part of your raw material. And we've seen in the previous cycle when crude prices went up, all paint companies, including Kansai, they were able to increase prices. What happens now? If crude prices go higher, do you have enough pricing power to increase prices, or in the short term, you will have to compromise? You will have to compromise on your pricing in order to gain market share.
I mean, fortunately for the paint industry, paint is consumed once in 3 years, once in 4 years. So I don't think consumer is getting affected by what is the paint price, right? So I mean, no one will remember what paint price you bought. If you have to paint your house, you will paint your house. And today the cost of painting is more than cost of the paint, right? So the labor demand is actually labor cost is far higher. So I don't think that's going to affect it. And the penetration level for paint industry is still at low with per capita consumption of just 4 kg or 4.2 kg. And we still have a long way to go, and which is why I keep saying that next 25 years we are going to have a double-digit growth.
That's great. On that note, we're going to thank you. Thank you so much for taking the time out and speaking with Teresa as well here. She's a convinced investor, and I believe she's going to stay put in Kansai for some more time to come, right?
I just have one follow-up question, Teresa, for you. The investments which we've discussed, given the way how world is evolving, anything that can be disrupted is getting disrupted. And I'm sure the face of some of these companies, it's going to change because of disruption. Are you worried about disruption in any of your key investments?
That's a very good question. I think in the financial sector, we are looking for companies that are disruptors. Paint, I think it's hard to see where the disruption is going to be. Airbnb for paint, I don't see right now. And in India, in our other Indian holdings, I don't see. They're so basic, right? Underwear is a very basic product, doesn't get disrupted. Does
that mean you're looking at fintech in India?
We're looking for companies which are going to be in the vanguard of using big data and using their data well and being able to compete in the fintech world. Does not mean we're looking at specialized fintech, partly because that's not so available in the listed markets. Because we're not venture capital investors.
Is it just a coincidence that you own two-wheeler companies in India, TVS and Eicher? They both are different propositions. They both are two-wheelers.
We see them as two different propositions. So our investment thesis for them is different. But we do realize that it looks like some redundancy.
Okay, Mr. Baruka has a question for you.
These are his customers.
No, Kansai. No, Kansai.
These are his customers.
not on Kansai, just to understand from investor perspective, how do you think is geopolitical situation is going to drive the world economy, and how the investors are looking at it, and how your strategy vis-a-vis that?
Yes, so I'm not sure we're very smart on that, because before Trump was elected, we said, okay, if he is elected, how do we Trump-proof our portfolio? Meaning about his protectionist policies and things that would disrupt global issues. And we said, well, we've got 30% of our portfolio in India, and India is the most immune from Trump, so we feel pretty comfortable that we have a Trump-proofing naturally in the portfolio. And then demonetization came, so we were wrong. But we do think about the geopolitical risks in North Asia, for example, and what that might mean. Obviously, I have a team in Korea now, looking at Korea. Issues in Korea include Chinese retribution against Korea for a little bit of tit and tat, include the South China Sea waterways, what will happen there. We don't have a lot of exposure to trade that's going in and out of the South China Sea's waterways. So we do look at that. And then I would say also Latin America, in many ways, is the least affected. Brazil does not have it's pretty endogenous, does not have a lot of trade, so that's helpful. So the big issues, I think, are the dollar. India, I think, right now, of course, the dollar, from our perspective, is our friend. Low dollar and a strong rupee. If India grows a current account deficit again, then that's going to be more problematic, and we'll see a return to devaluation. But right now, I think it's looking okay. And the geopolitics, obviously, the main thing is the China-India tensions. The India-Pakistan tensions are always there. They've been there my whole life. But the China-India thing is a little bit...
that's eased as well now. So
it's eased now, but we can't ignore it altogether. But I see it as a small probability with a reasonably sized impact, but very small probability.
I'm very curious to ask you, what was your first India investment? The first ever?
In my life?
Yeah.
I helped to create Crystal. From the ground up,
very nice.
with Pradeep Shaw and the people from ICICI back in the 1990s, late 1980s, 89, 90. So that was my first investment in India. I also created the first venture capital fund in India because there was triple taxation for venture capital that wasn't government sponsored. So the first private sponsored, and we used a charitable trust structure, which was risky, but it worked out well. And then eventually other VCs started, and then the government changed the policy. So,
well, you know what, Teresa, you've left us. I mean, that could be our parting shot, and I'll leave that with Nikunj. But you've left us with a very, very interesting thought. India is Trump-proof.
What amazes me is that
to some degree, I mean, if you're not in IT, if you're not IT and pharma, yeah.
Which is why you don't have any of it.
We don't have that.
So my closing question would be: Indian food or Indian stocks?
No,
yoga.
Everyone likes yoga. Yoga number 1, India food number 2,
so
Mendi number 3.
Yeah. For those who
Indian
don't
companies
know,
number 1.
8 companies, above.
She was 7
else.
investments, so maybe I'll not.
in case you guys didn't know, Teresa has been practicing yoga for the last 15 years. Am I right?
Yeah.
Wow. Yeah. So yoga number 1 always.
Yeah, there you go.
Well, an absolute pleasure and a delight to have you on the show.
Thank you very
Enjoy
much.
India stay, and certainly hope to see much more of you in India.
Thank you. And thank you to Mr. Baruka for coming.
Thank you.